Stocks trading higher today as investors await the election results. For more on what this presidential race means for markets moving forward, let's welcome in now Jay Hatfield, Infrastructure Capital Advisors CEO. Jay, it is great to see you. So listen, it's the big day. It's finally here, Jay. Voting is underway. We'll start here, Jay. Who, in your opinion, is better for the stock market? Is it Trump or Harris?
Thanks, Josh and Julie. It's great to be on. Well, we actually have a differentiated view, which is that it really doesn't matter that much unless there's a sweep by one side or the other. I think these Trump trades, the Harris trades are overdone. A good example is when Joe Biden was elected. Obviously, that must be great for solar stocks. They were at the time going to get rid of hydrocarbons in short order, but yet solar stocks are down 66% since Biden was president. So we think generally these trades are overdone, with the one exception that major changes in corporate tax rates can be great or horrific for markets. And that's why what we're going to be focused on is really the Senate. We don't think the presidential election will be known for sure until the weekend, which would be terrible for the markets. But if we get results from Montana, Ohio, West Virginia, those are all not battleground states. Those are solid Trump territory. And if it looks like those are going to the Republicans, then that means almost certainly they will win the Senate, which will create stability and probably a rally in the stock market if that in fact does happen.
So that's interesting, Jay. So you think that could happen even if we don't yet know who has won the presidential?
Absolutely, because just keep in mind that we look at the betting odds only for short-term direction, not the absolute outcome. We don't think bettors know any more than we do. They're not all knowing. They don't have better polls. And you can't poll turnout. And we do have a huge gender gap. Reproductive rights was an issue last time. So we don't think it's knowable on the House or the presidential. But the Senate's completely different. It's almost unprecedented advantage to the Republicans. And it's in states that aren't driven as much by turnout. They're not swing states. So you could very well get this Senate locked up, which would create stability in the markets and probably spark a rally. And that's why we increased our target, not for this year, but for next year, established our target really at 6,600, just to tell people, even though the market's expensive, we still think you should stay long through the end of the year.
Do you think, Jay, there's just a possibility that we overstate the importance of the election? At the end of the day, what really actually matters, it's how healthy the underlying economy is. What does corporate profit growth look like in the quarters ahead?
Absolutely, and everybody doesn't really seem to want to talk about it, but Fed policy matters a lot more than who's president. Of course, the president does nominate the Fed. So for instance, this is controversial, but we think almost all the inflation during the Biden administration came from a overly aggressive Fed. So the president gets blamed for what the Fed does when the Fed creates a recession or inflation, but it didn't have that much to do with it because they are independent. They did nominate whoever's in charge, possibly, but so in general, it's what people do, but it's not necessarily rational.
Of course, it's not necessarily rational, but there are potentially some policies of either candidate in this case, depending, as you say, on the composition of Congress, that could have an effect on the economy. Again, it's all theoretical, as we know, Jay, but the folks over at Oxford Economics looked at the various GDP scenarios, GDP growth scenarios, based on what the candidates have said. And it looks like their estimate is that under a President Trump in a divided government, the economy could potentially grow the most going out to, I guess, the furthest out. If you go out to 2028, they see the worst scenario under what they call a limited Trump scenario, where he enacts a lot of his policies, including things like tariffs, including some of the immigration changes that he has talked about. So how do you think about this? Or do you think that it's too difficult to tell what actually happens, given the gulf sometimes between what candidates say and the reality?
Well, this also will be controversial, but we think the stock market might be better off, assuming divided government, with a Harris presidency. Because you have to keep in mind that in the midterms, next in 2 years. If Trump is president, then there'll probably be a Democratic sweep of the Senate and the House. So the long-term stability is equally important, and sort of half Trump could be negative. So if you just get the tariff increases but don't get a corporate tax cut or a personal tax cut, then that would be negative. We think people misanalyze the tariffs because they assume the money just goes into the ether. You have to say, well, what are you going to do with the money? Are you going to pay down the deficit, reduce the deficit, going to cut corporate taxes, going to cut personal taxes? But Trump won't have any ability to do any of that unless they take the House as well, which is problematic. So, like I said, counterintuitive, we're pro-market capitalists. And Harris isn't, or at least the Democratic Party certainly isn't. But we would think it might be better for the stock market to have Harris president if we have divided government.